Let's quickly check in with the markets now. The JSE looking set to join a buoyant session this morning, with investors still welcoming a better than expected U.S. inflation report from Wednesday. Now, Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, joining us now for analysis. Mr. Thulare, let me thank you very much for your patience on the back of that SIU story I know you've been holding for some time. Let's start with the Rand, rallying to its highest in 6 weeks yesterday as the dollar fell to a one-month low after economic indicators in the U.S. showing that inflation was peaking. Your thoughts on the Rand at the moment?
Good morning, Polly. I suppose, look, strengthening all the way from 1660 to 1614 yesterday afternoon is never a bad thing. I mean, we rallied about 1.5% following the release of the US CPI data, as you alluded to. I mean, core inflation out in the US came in at 5.9% year on year. This is obviously prompting markets to position themselves for a slower pace of rate hikes from the Fed. And I mean, this bodes well for currencies such as ourselves, as the Rand obviously benefiting from a softer dollar. And on the back of that, I mean, year to date, the Rand has lost about 1.2% against the dollar. I mean, this is relative to about 3-4 weeks ago, where this number was actually, around the 3 to 4% worth of losses. So there's already price indications that already we could start to see a large fuel price cut at the petrol pumps in September, between R2.50 to R2.70, due to the softening of the global oil prices as well. That is going to really ease the pressure on household finances and also cool inflation down. And that could also factor through into Lesetja Kganyago and team in terms of their outlook for interest rates into the close of the year.
Yeah, let's continue the focus on U.S. inflation easing, Matete. 8.5% as gas prices slumped. Does this mean, or should I say, does this now put the U.S. Fed's hawkish outlook in question, and should we still talk about the global recession?
So look, I mean, the print was slightly less than the 9.1% increase in the prior month. That had obviously marked the highest inflation rate in 4 decades. So, the market, perception is that obviously we're having a cooler than expected reading of this U.S. inflation, and that is a sign that potentially that the Fed could ease their aggressive rate hiking program that we have seen over the past few months. But obviously this means that the weakness in the dollar comes after this U.S. inflation decelerated in July. This is obviously reflecting the lower energy prices that we have seen. But this soft inflation reading, we really need to make sure that, now the Fed is talking about potentially, and also the markets, potentially about a 50 basis point increase relative to the, repeated 75 basis points that we had been speaking about over the past few weeks. But we really need to caution, because after the inflation print number yesterday afternoon, we did see a few of the Federal Reserve officials coming out to saying that the softening inflation data does not change the U.S. Central Bank's path towards higher interest rates this year and also next year. So it looks like they're also going to be really data dependent to see how the markets play themselves out, how the situation out in Eastern Europe plays itself out. If that obviously escalates and obviously, oil prices and also gas prices also escalate, it could also mean that we have a further 75 basis point increase in interest rates out in the US relative to where the markets are starting to price it now.
Interesting outlook indeed. Let's talk company news for a moment. The MTN Group saying its first half earnings have surged by 46.5% after adding more subscribers. Talk us through their numbers.
So Ralph Mupita and the guys at MTN are really doing quite well. I mean, they've reported more than a threefold rise in their net profit for the first half of this year. I mean, obviously they're benefiting from a strong revenue growth in all their markets and obviously the focus on the expense efficiency program. That is something that he implemented when he came into power about 2 years ago. So they've generated net profit for the half year ended June of around 8 billion relative to the 2 billion that they'd done last year. So they're saying that they're really well positioned to navigate the prevailing market conditions. And obviously, don't forget, we have seen some M&A activity and talk about them potentially acquiring Telkom. So that has also backed its medium-term guidance to deliver, some really strong revenue growth numbers. But they did allude to something that was quite interesting, which was their network availability in the month of June. That plunged to about 89%, and their target there is around 99%, and that was largely caused by Eskom's frequency of load shedding. But despite the challenges, MTN has still reported good service revenue growth, and that is obviously underpinned by the demand for data that we have seen. And also some of the other interesting highlights from all of this is the fact that the board didn't declare a dividend for the half year, but it expects to pay a final dividend for the year of around R3.30.
Let's conclude the conversation with Old Mutual publishing its trading statement for the period which ended on the 30th of June 2022. Help us make sense of their performance.
So if you remember, Old Mutual, that's a financial services group that offers a really broad spectrum of financial solutions to the retail market and also corporate consumers across a lot of key market segments in 14 countries that they operate in. You remember that they have operations in South Africa and also the rest of Africa, and they've got also a small niche business in Asia. Now, they've forecasted that they'll report about between 65 to 85% increase in net profit for the first half of this year. So they're expecting a net profit around between 4.9 to 5.5 billion relative to what they had seen last year of around 3 billion. The other interesting parts to all of this is that the investment group, obviously, as Old Mutual, they're really seeing a positive trajectory for the country, starting a shift in the energy policy that we've seen from President Ramaphosa announcing a few weeks ago, and also the inclusion of the private sector in rebuilding the economy. And they've also started things such as the allocation of spectrum in the TMT space as something that we really need to build on, and also some of the reduction of the red tape in the visas and etc. That all these regulations that government is putting into place and obviously starting to step up, they feel that the country is actually on the right footing. And I suppose maybe that's also why we are seeing their numbers looking so perky.
Yeah, Matete Thulare, let me thank you very much for that markets update. He is the head of foreign exchange execution at Rand Merchant Bank.